following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Larry's, I think, traveling today, so it's my pleasure to be here. I usually do the 11 o'clock show. 11 o'clock is called the Tiger Technicians Hour. And I have a service here at TFNN called the Opening Call. That's my newsletter that goes out every single morning starting at about 6:30 or so in the morning. I start sending off the charts of the Dow. Let me show you here what I do. The Dow chart right here with commentary at the top and commentary at the bottom, showing exactly what we're looking for and why we're looking for it based on the Chapman wave methodology, a methodology which essentially says identify the lowest low bar and merely count each successively higher peak until you get to a D. D is where other things, the fourth highest peak, other things can happen. It can go to an E, an F, and even higher. F is where you want to be really careful. And lo and behold, if we're looking at the E-minis trading at 2014, some 33 points off the high of 2047.50, making a what? A peak F in the Chapman wave, just as the stochastic started to turn down from the 96% area to the 88% at this point, but we haven't started the day's trading, so this is just pre-market. And look at those two candles from yesterday and early this morning going into this very second. Sharp down moves. We'll see what happens. But a number of things have happened, so let's do this. Let me go through a couple of charts. The opening is in, 25 minutes or so, 22 minutes, and we've got plenty of time to prepare for what we're looking at today. I had a number of questions already, so let's go step by step. On the right here, you see the 120-minute chart, and where did it go to? It had a peak E, the sixth highest peak. It pulled back quite sharply, hit a trend line, which became two trend lines after it bounced off it. And then it went to that peak F that we were just talking about, the sixth highest peak at 247.50. And then it started an H pattern. So this is a pattern that I call the right arm extension. And it has a characteristic that also looks like what I call a rogue wave. Let me just define that because it's part and parcel of what I think we're going to start seeing quite a bit of over the next week. It's where the technicals, this is the MACD. Now, Larry doesn't use any of these techniques at all. He has a beautiful set of techniques that he uses based on Gartley and Butterfly, and he does it fantastically using Fibonacci and other techniques that he's developed and refined over the years. So I'll do something different. And you can see that the MACD, the moving average convergence divergence, two moving averages. I call the green one the fast moving average. It's actually called the 9-period differential. And the red one is the slow moving average. See where it crossed right here? That was after a potential, I call it an alternate wave, and it pulled back. And then you'll see that there were lower lows and lower highs in this particular index. Keep your eye on this index here. Let's move it down. You'll see this is called the slow stochastic, also a set of moving averages. And the green and red lines show you that on each successively higher set of peaks, you were making lower lows. So that made this move here to 2047.50 what I call, it's a false move. It's a technique that I've defined over the years as the rogue wave. And what does it say? My expression and comment goes like this. When you go to the beach and you see a sign right there as you're walking onto the beach itself, and it says, high tide at noon. And you're walking along, and it's now 12 o'clock. You say, great, I got you just in time for the high tide to be finishing. I'm going to choose my favorite rock, go lie down on my favorite rock and watch the tide going out safely without getting splashed. So you go to the edge of the favorite rock, you put down your towel, you put your suntan lotion on, you put your dark glasses on, get your book ready, get whatever it is you're going to eat and drink. And the next thing you know, ka-splash. 12:06, and there's this wave that just soaks you. You look around, but before you can even wipe your eyes, the tide's going out. Why? Because the tide had already made that noontime right there, tidal turn, and there was that one wave that just didn't see the sign at the beach. And at 12:06, splash. It went further up than any of the other waves, and then the tide continues down. And that's exactly what we're looking at here. We're seeing that on the shorter term, the 120-minute chart has gone from a sell signal to a sell mode where it is right now. But wait a minute. In the 120-minute chart, we're in leg F to the downside. Wasn't F on the upside important? Yeah, that means that we've got to look at a smaller time frame. So we'll grab the 10-minute chart right there, and lo and behold, what do we have? We have a leg F. So if the base here at 2013.25 can hold for the next 20 minutes or so, and the market can open down, but not as down and steep as everyone thinks, you'll see the futures, which the futures are the anticipation of a mood. This is where people are putting money on, saying, I'm betting that the market is going to go down very sharply, minus 14.50 is where it's at right now. And it's saying that if suddenly the market starts to open and go down and does not go down, say 14 points in the S&P, but only goes down 8 points, you will start to see the S&P futures say, whoops, mistake. We thought it would go down deeper. I think it's going to go back up again. No, not I, it's the people trading. And they start to cover their shorts and add longs. And all of a sudden, the next resistance will be one of the previous peaks. In this case, the peak of 2018.75 that you saw at 8:20 this morning, that would be the next area of resistance. If that's taken out, you will see the next one at 2020. There are a whole bunch of other things that I'm looking at at the moment, and I'm going to just say, let's see, D, A, B, C, D, E. Whoops, E. Thank you, Gator. Of course, there are people that use the Chapman wave technique for a long time, and sometimes in my rush to do things, I might have this is not an automatic system. There are some people who have automated it, but the problem with automating it is that you're going to miss some really subtleties that only the eye can see. And so far, I haven't found a computer that's picked them up yet and able to track them, to be able to give you that alternate wave count. Thank you. In the Dan Gator said E. And I wrote an F instead of an E. So here we are, the fifth wave to the downside. Okay. Now let's do a couple of other things. We're going to look at right now, let's just run a whole bunch of things that we prepared for the opening. I'm going to do this. That's the E-mini down 15 at this particular point. I want to look at bonds. Bonds right now are trading in the 120-minute chart. This is leg A, B, C, I believe. Yep, C. And it's acting quite strongly. And at 164 and 1630 seconds, we've got a bounce in the bonds. And I will talk about relationships in a moment to the VIX index, the bonds, the dollar, and gold. I'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman sitting in for Larry. I should have said, looking good, Buddy Ray. Feeling good, Lewis. Yes. So let's go on. So bonds are saying, this is the way I'm analyzing it. Actually, I had a question. All right, big deal. Are you long or are you short? Where are we? Okay, so I'll go through that right now. If bonds rally and the volatility index, the VIX, VIX.X, the VIX, which is trading at 1494 it closed at 1494, but there are indications based on the ETNs that are based on the VIX index that the VIX is going to open up quite sharply. If the VIX starts to trade in the 16s by today or Monday, that's going to suggest that this selling pressure could continue for a little longer. That's number one. Number two is, if you're looking at bonds rallying, it's saying that there's a good chance that bonds will rally as the market will pull back. So I just want to clarify that, just to make it real simple, and then we'll go through some of the other things. But we've got a caller on the line. We've got Gator in Franklin, North Carolina. My daughter lives in North Carolina. Hi, Gator. How are you?
Good morning, Basil. How you doing?
Well, thank you.
Looking at BIS. I'm going to start a position this morning. I'm looking at it. 120-minute chart did a wave E. We got a good cross on the stochastic. The MACD is about ready to cross. Did a wave B on the.
Oh,
go ahead.
Let me just give me 1 second. I just want to tell the folks the BIS, or the ProShares Ultra Short Nasdaq Biotech. It is 2 times short the IBB. Think of it that way. Okay, so continue. Sorry.
Well, that's okay. I want to get a position. I'm going to start it now just to keep an eye on it. But I think I'm going to start a position at the open. Just dip your toe in, so to speak. And
so So then this is what I'm going to recommend. It was in my newsletter yesterday. It's potentially not the BIB, which is 2 times long. I say that's finished. We're going to be looking at the BIS. Never got a chance, and it had a huge move yesterday. In the 45.90s, and actually right now it's trading at 46.70s, it's indicating to me that there's a really good chance that if it takes out the high that was made on the 17th of 51.07, it's going to retest the high of 54.01. That was the high, the most recent high made on the 9th of February. My thinking also was, I don't actually like these big gaps to the downside early in the morning, because especially when I've got my trend gauge, my Chapman wave, I use Richard Arm's trend index. I've made up something that I call the Chapman wave trend gauge. All it is his numbers, and I use the actual numbers of my own preference to interpret them a particular way, and it's got a huge accuracy rating of being correct, that is. So I'm looking at this and I'm saying, I've got a signal that says sometime in the next 2 days, that's today and tomorrow, today and Monday, that is, Sunday and Monday, there should be a move of about 7 to 9 points, could be even a little more, in the S&P futures that impacts positively the cash index for a short period. I'm thinking that we will get an opportunity, a better opportunity to buy the BIS. I could be wrong because we could miss it completely. I'm going to go for those people. I know a lot of people follow the IBB, which is the iShares NASDAQ Biotech ETF. And just for clarification, we remain short from 391, just off the top of 400 since July. And we're staying in that position, at least I hope for quite a while, because 222 to 218 or even 208 is kind of my target in the longer term. So in the meantime, you've got an H pattern that says you could form another H pattern. So I'm going to say to you 2 things. One is, I believe that the IBB has, you can see from the last 4 days ago, where it started to move to the upside, there is still some potential for the characteristic of residual strength to be shown. So here we are. If you're going to go into the BIS and you buy it now, if the IBB is only, say, 6 or 8 points away from starting another M-shaped pattern instead of breaking the low of 240, then it's not an ideal time to be buying the BIS. So I'm going to suggest, Gator, that you maybe start, as you said, a small position, but the real position that I'd like to get is closer to 44 to 43. I don't know if we'll get a chance to do that. That's why I'm saying you could start the position. Now, where do you know that you want to be holding it and then to add to it? I would do it very simply. I'd say the 200-period moving average of 47.73 is in the 120-minute chart. That's kind of an area where there should be resistance. If it's holding there, I would go with the general market. If the general market attempts a rally today, and that rally can't get much further than, say, taking the Dow to just minus 65 to minus 45, and then it starts to move down again, that's kind of the characteristic that you want to see. You don't want to see the low of the day made early on, and then just slowly over the day, it gets better and better, because that means you're going to be buying the BIS at the top tick. You can see what I'm thinking here, right?
Correct.
It's timing. And the timing was perfect when I said yesterday that we want to be looking at the BIS. That would have been perfect at the open. Look at the comfort you've got. 43.36, say you got it at 44. Now you've got a huge comfort zone of 2 points, and these things move very quickly. I don't have to tell you. So I'm just going to say to you, BIS is a trade, but it might not have all that far to go before there's a sudden turnaround. We don't know. So I'm just going to say start the position, and all I can do is say that the best entry point would be maybe next week sometime if it comes down to between, as I say, 44, 43. And if it starts to break above 47.70 and the market is still showing a lot of weakness, you could add a small position. The second position must have a much tighter stop. That's all.
Pretty much what I was thinking. Like I said, I was just going to do a starter position here. The IBB, which is based off of, if you pull that chart up, and the ES, they don't really mimic each other. They seem to trade independent of each other.
Right, absolutely. But what I have noticed is that when the market is sharply lower, if there is weakness in the IBB tends to hold that weakness and get even weaker.
Right.
So
well,
I'm saying,
I've got some signals that I followed that shows the trend. Like, for instance, the 120 seems to be rolling over, obviously quicker than the daily. Like I said, it's just a starter position, and when the market confirms, then go to the full position. But just like you said before, you buy a little bit. That way, you pay attention.
Because you'll be able to notice exactly from your position, from your trading account. You'll be able to see if the market starts to rally, IBB fails to rally. That's a great sign that there's no strength.
Right. Tight stops. Real good, Basil. Thanks so much.
Thank you, Gator. Thank you for calling. This is Basil Chapman. We'll be coming back after the market is open, or just about when the market opens. And Basil's sitting in for Larry. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento. I usually do the 11 o'clock show. That's the Tiger Technicians Hour. I'll be doing it, of course, today. And 11 o'clock Eastern time, that is. And sitting in for Larry. The Dow's down 56 at 17,446. S&P is down 7 at 2,029. Comp index is down 24 at 4744. The VIX is rallying. It's up 14.94, up 77 cents. E-mini is down. Wrong E-mini. E-mini is down. Where did it disappear? Have it all over the show. 14 points at 2014. We've got gold. Let me just check the gold right now. Gold is down $2 at $12.21.90. You can see we're right on a trend line support in this. We made a peak D in the Chapman wave. There's that peak F we were talking about just a little bit before. And what we've got is holding tightly. This is an area of very important. This is very important for the gold index. You see that the MACD is very negative. Stochastic still at 27%. It could go down to the single digits. And you've got 9-period exponential moving average support in the weekly at 12.14, and it's trading at 12.21 right now. So this is a quite a critical period for gold. It's had a spectacular run. It's gone basically sideways since early February. So we're going to be watching this closely. Let's go to crude oil, and then we got callers on the line. So here we go. Crude oil down sharply. There's that peak F in the Chapman wave methodology. You get to that 6 highest peak. I used to number them. I started using the letters when Bob Prechter became very famous with Elliott Wave. And so I decided I'd use letters. I didn't want to have anything. I didn't quite understand Elliott Wave. Didn't want it mixed up at all. It has nothing to do with Elliott Wave. It's a Chapman wave. So 6th peak, and you've turned around in the MACD and the stochastic. This could be quite a sharp pullback for crude oil because at 38, it's a 38.58, down 121. That whole 38 to 36.50 area is going to be really important support. Otherwise, you start to make an M pattern, lowercase h actually, in the weekly chart. Let's just go to the dollar DXY. The DXY is at 96.19. Nice move up. 5 very strong candles so far. But I think the dollar's having a rest period in its monthly and weekly charts. I think that the gold is going to come back strongly very soon. We'll see about that. And if the dollar moves from 96.20 into the 97.30, 97.80s, that's something completely different. So we'll watch that very closely next week. And one last thing is the TLT trading at 130.62. Nice look. There's that little move up. Peak A, B, leg C right now. And it's in this trading range. So let's go to our first caller in there. Well, since the market's opened. Mark in Denver. Mark, how are you?
Good. How are you, Basil?
I'm very well, thank you.
Good. Hey, I was looking at the Amazon chart, and it looked like, to me, it was, let me know what you think on the daily. It looks like it still has the potential for a peak, to make a peak D, but after over 585, let me know what you think.
Okay, so do you have a position in Amazon?
Nope, just looking at it from afar.
Okay, so I have a couple of questions. Is it something that you're using as a tool for some of your indicators, or is it something that you're looking to get into, something you might want to buy or short or something, or is it just...
I'm thinking maybe of a call if we think it's going to make a peak D.
Great, okay.
But it had a pretty big fall after peak C, so I didn't know.
Right. The reason why I'm asking is that where it is right now, there are a couple of ways of looking at it. I've been looking at Amazon as one of the leaders in the NASDAQ that has started to digest the huge gains and is essentially, I call this in Amazon a peak D in the monthly at 696.44, what I thought was a potential hat-trick top. In my expression of a hat-trick top implies that it has made a peak in the daily that is really a sell mode. The weekly has gone to a sell mode, and the monthly, actually, on a purely technical basis, let me just look at it. Technically, the MACD has turned down, but it hasn't crossed negative, and the stochastic still at about 77. So I'm in the sell signal in the monthly, but not a sell mode yet. if this Roman candle that we're looking at right here from last month, if Amazon at any point in April trades under 522, let's call it 520, a round number. If it trades under that any week, in other words, in a smaller time frame from the monthly, if it closes under that on any Friday close in the week of April, we'll be looking at a potential to call it a sell mode, and Amazon will go down deeper. My thinking here is that some of these former fantastic winners are taking a time out. Within the time out, if I can go to Google for a moment, I want to show you what I mean. Potential peak D in Google. I'm not looking at Alphabet, I'm looking at Google. Priceline, PCLN, I don't know if I've updated it yet. Potential peak, there is a peak D as well in Priceline. And all of these stocks, I mean, Priceline went from 1476, that's 1476, to 954. That is a huge decline, one of its biggest declines in the shortest period of time. And so as those NASDAQ, and we saw that the QQQs are actually not performing as well. So the reason why I'm giving you an overview of some of the former great winners that are digesting their gains is to say, I've got a shorter term trend line in Amazon that comes in right here, that if Amazon goes above yesterday's high, and yesterday was, I'm sure you looked at this, yesterday was very impressive action considering what the market did, correct?
Correct.
Okay. So now what we've got is a potential peak C1 right here on the 2nd of March, a peak C2 at 581.32, just a tad lower than the 585 round number from the 2nd. And it means that if we break above 585 over the next week, going into the end of the month, which is a week from today, Amazon's weekly chart will then go to a leg B, and we'll put that monthly chart in the digesting phase. I'm not saying it's positive or negative. It just means sideways trading band. So now you're looking at the shorter term. And this is what I'm going to say to you. Because of Amazon's action today, I'm inclined to say that if you're looking at an option, I'd be looking at a call option. Oh, it's moving up right now at 250. I love the action right now on a very short-term basis because the MACD is flattening out. The stochastic's rallying. It's up almost $3, and the general market's down 85 in the Dow, down 12 in the S&P. Yes, I think you're absolutely got your eye on the prize right here as a counter-trend move. I wouldn't get too carried away. We're looking at April. Are you looking at April as a call position? If you did?
About a few weeks. Yeah, a few weeks, yeah.
Can I make a suggestion? I'd look at April. I try to get as close to being in the money as you can afford to do. You wanted to move about 3/4 to 1 or 65% at worst to 1 point. So every 1 point is like 65 cents. You don't want it 1 point up and you're making 20 cents. I just don't think that's worth it. We've got a break coming up. Can you hold?
Can you just, I'm going to have to.
I'll go through it. Okay, you can listen and I'll go through it. Okay. We'll be back, folks. Dow's down 85.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market-Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, folks. We're back. Basil Chapman. So Amazon. Yes. So Mark, what I'm going to say to you is, in terms of Amazon, yes, it's acting very well. It's up 3, and probably in the time that we were talking, you would have had a great position on your call position. But yes, don't get carried away, because there is a lot of resistance at the 580 to 582 level. But if you can get there, that's obviously great. That's number one. Number two is, I would actually take my profits. I'd have specific goals. I'd have, for instance, 120 minutes is in leg E. Could still pull back a little bit. 565 is just way too low. So you've got to be a little bit careful here. But what you really want is it can get anywhere to the 580 to 581.5. Say, let's go to 582. 580 to 582. I would take something off immediately. And even if it goes way higher, that's fine. Treat it as a gift in a market that's showing some signs of toppiness, and you've got the stock that's holding well at this particular point, showing good relative strength. But most importantly, if Amazon is able to get to the 582 level, there's a chance it could have a move to the gap. Let me move this away. Folks, if you're new to my work, this is the daily chart. This is always the weekly chart. This is the monthly. And right here is the 120-minute chart in the corner. Right here, not quite the corner, but that's it. So that's the way I would look at it. And don't get carried away, because if by the end of the day a rally starts to fail in the S&P and the Dow, and all of a sudden you're looking at minus 123 in the Dow, minus 15 or 16 in the S&P, you could get a big acceleration down going into the close, and maybe a reflexive bounce maybe Monday. But just be a little careful, and that'll drag Amazon down. So don't get carried away, but it is showing good strength, relative strength. Okay, now the question was, so what are we doing? Where are we? Let me just run this by you. I've got right here. This is what I show my subscribers. I wonder if I can actually get that. Let me just tell you, I've got a webinar coming up this Wednesday evening, the 30th. And it's the coming 3-month outlook in the market and which sectors could rally or fail. That's really not the whole thing. I've been working on it for quite a while. It is really a very intensive look at markets. And this is the coming 3-month outlook. The month of April could become one of the most important months of the year if certain key levels in major indices, either up or down, are broken. This analysis will be based on technical, fundamental, political, and socioeconomic reasoning. Having declined 16% from the May 15th all-time high, the Dow has rallied 10% since January this year's low, while having been positioned on the long side quite frequently, actually. Basil subscribers have been selectively moving to the commodity sector. Now we're actually slowly moving out of the commodity sector, an area avoided for years. So will there now be a change in the market leadership? Can it be sustained? Also, where are we in my skyscraper icon theory, the watch for a major market top? Are we still in a mega, actually a giga, bigger, higher, wider, better, extravagant phase? Will we soon replicate the sartorial splendor of the 1920s of Downton Abbey? That's the dressing that comes in the latest period of a major market move. So the coming 3 months is going to be really important. In fact, the March candles going into April are going to be specifically important. So what I do for my subscribers is every single day, I give them this right here. Should be coming up. There it is. I can't do that because that's our positions. But let me show you what I do. I go like this, right here. That's my daily. Dow goes out about 6:30 or 7 o'clock every day. Shows you exactly what we're looking at. We were looking at the chance for this to become a peak F in the Chapman wave. So I give the report there. I add to the report over here. Then I give an overview. I discuss in this overview the 120-minute chart making an arch formation in the Dow, the 120-minute chart in the VIX index starting to rally strongly. We are long sentiment with so far a very nice gain. I talk about the Chin index giving me an indication of a sharp rally coming, and it could be from lows, but it's within 2 sessions, and then it should fail. That's the way I look at it. Here's the daily peak F in the Dow and the S&P, and I discuss what we're looking for, why we're looking for it, and what you should look for. And here the levels over 15.60s in the volatility index is going to, the slide continues, and we're at 16.24. It's just very comprehensive, and then it goes on and shows different stocks. I'm not sure which one this is. Is that the one? Yeah, let me just show you. This is Orly. We were short, we were long, and then we stepped aside. And it's a market indicator. I'm going to be talking about this on Wednesday, this coming Wednesday night. Why? Because stocks like the parts, like the automobiles, like an overall company that we follow for years and years, these are going to be telling us a lot about the economy and a lot about what we could expect. Bonds, the relationship of this particular chart right here, this weekly chart, if I can get it right here, this weekly chart that I spoke, I was interviewed by Tom a couple of weeks ago. Back on the 29th, I said, if we are matching this, we could go up higher. Well, we got out a little too early, but then we managed to get short, and we are short the Dow. We're being short a couple of days. And why? Because look, in the weekly chart, if we were here, I said on the 21st of March, are we here? Are we matching this move from the 6th of November in this chart pattern? Chart patterns repeat over and over. And in fact, we stalled right at that trend line, that red trend line, between the dashed line, the gray line, and the red line. And now we're stalling. Is the MACD, so look at the MACD, it continued expanding. Stochastic still held, and yet the Dow could not break that high of 17,977 until for a whole week, until it broke down. Are we going to replicate that? This is really an important period. So we are short. So that's number one, we're short, and we are long the sentiment indicator. We are still, I don't know if we are still long this particular index. Let me just double check. No, we're out. We were long the DBC because it had gold, it had crude oil, it had everything. So now we're out with a profit, and I'll try to go back at some point. This is a rare peak G, but it looks to me like the DBC, which is the DB Commodity Index Tracking Fund, with gas, crude oil, gold, zinc, soy, corn, sugar. Look at the waveform. Look what happened in soy. It went to leg D, and now it's making a peak D. There's your sharpest move. In the Chapman wave methodology, you find the lowest, most identifiable low bar at 1263 in the continuous contract of sugar. And sugar ran peak A, peak B, peak C, leg D, and I said, all right, we've got to be careful here. And what happened? Today we've got our peak, well, if there's no new high today, recovery high above 1675, we've got our peak D. And the MACD is still quite good. Stochastic's gone from 6% to 95%. So far there's no real signal, but it says be careful because we could be coming down a little bit. So I just wanted to go through those things, where we are, what we're looking at, and there are a couple of things I want to talk about. So we've got another segment coming up. Basil Chapman sitting for Larry presented. Dow's down 83, S&P's down 12. I'll be right back. And here's the chart.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, so one of our members of the Den said, gave a whole thing on menswear. Menswear, there were 2 distinct periods in the 1920s, and it goes through a litany of the different things. And I typed in to say, I mentioned a few years back, I do this thing in Trends Watch, which I've done all my life, actually. I mentioned a few years back that men would be wearing hats again. In fact, if you look around, there are very few peak caps, except you might have Red Sox or baseball, New York, whatever it is, the sports one. But the only people that are really wearing peak caps are older guys And the old folks have taken over the young folks' denims. They're all wearing denims, the old Bernie Sanders denims. So what we're looking at here is things change. And I said in the den, I mentioned a few years back that men would be wearing hats again, dressing up. I mean, look at the little children. The kids were wearing just little denims or little, maybe a T-shirt for years. All of a sudden, you walk past these children's stores, and they've got these clothes for kids that are priced out of sight and fancy. So we're going back to that. Dressing up is coming back. The women wearing those bustles and all sorts of crazy things as a fashion thing, hats, huge hats with feathers. That's what I think. Look at the hobos of the on the trains in the 1930s. No matter how poor, they wore hats and mostly suits because that was the fashion. Not only that, when you're very poor, you kind of want to look like you're doing okay. But today, our richest young entrepreneurs like Facebook Zuckerman, he wears a T-shirt. He gets interviewed, one of the wealthiest men in the world. He gets interviewed with a T-shirt and sloppy denims. That's going to change. And that's going to change as things get bad, not as they get good. When they're good, you can afford to do whatever the hell you want. You remember the song 1934? Al, my wonderful engineer here, always plays it. Anything goes. There we go. Anything goes. That was written in 1934. Oh, are we just about to wrap up? No, we're not. That was just a tune to So let me do this. What we're looking for today, we'll base it on the Dow. The Dow's down 80. It's on the 9-period exponential moving average. If the Dow closes underneath 17,400 and the VIX index.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.